Hi, Dwayne. Hi,
Hello,
Adam.
how are you?
Good. I just want to make sure everyone could hear.
I can hear.
Loud and clear. Can you hear me?
Yes, sir. There's my video.
All
Good,
right.
good afternoon.
So I'm just going to do the video to make sure everything is working and then I'll go dark.
Okay. Yep, I can see. Very nice.
Fantastic.
Hi.
I don't think my video is working.
I can see you, Dwayne.
Okay, I can't see myself.
Okay. Can you see us?
Yes,
Good. On this rainy day. Are you having a lot of rain up there?
we just had a good shower.
We had flood alerts in Dade and Broward counties, which ended this morning. So there was some flooding.
Oh, I hope it drains off before you have to run out. Miss Virginia, are you there?
I'm here, Kai.
How are you this morning or this afternoon?
I'm doing well. How are you all?
Good. I can't see who's there. I see the empty chairs, so.
We were trying to fix that.
Uh-huh.
Yeah, because that needs to be on the podium, all this got those
Yeah,
chairs.
and I'm trying to change it over, but, like I said, they didn't include me in on any of their options
Yeah,
yesterday,
this
so.
right here, so I don't know how to change this. Cause it was showing just the podium
I
out
don't know
there.
how they did that. Let me. And they didn't call you back?
No, that was okay.
Nice,
I think it's the camera got moved or something.
I know, but even still. It's not gonna move anywhere.
I don't know which one you're trying to move.
I'm trying to move this camera.
Okay. That, it's that camera. Okay.
It doesn't matter, it's not even moving anywhere.
It should be the podium.
I'm still gonna get fired. I'm not. I'm calling it right now.
We can't get on camera to show anything but the chair. I don't know what's going on. Yep, so they can't see what's in the room. They can see everything else, but they can't see what's in the room.
Hey, Mark,
It was
I need to
showing,
get a hold of somebody because they're about to have a meeting and then they got another meeting after this one.
it's 1 o'clock, so.
Okay. Call me. You give me the, hey, guys. That's it. Yeah, it's good. You don't want to share it with you.
I don't know, last video was about. Sorry.
Okay, I don't know how to get this camera. That's the mayor sit 5, city manager sit 1. Overview.
I'm just saying this.
Oh, okay. Well, I know it's hard. That David?
I think somebody, I think this TV got turned off or changed the input on what you. But the other one,
I just need these
Hang on,
chairs
talking
over
to
here.
Amanda, hang on a second.
Okay.
I just need those chairs over there. That's not, because they can't see. Um. See who's in the room. I don't know.
But I just switched that off, I think. Okay, now you got the, okay, that's,
Oh.
Oh, that's.
if that's what you want to think.
But it's not.
Well, why, yeah. Why is it not going in here?
Okay, this, I think you have to choose that, the correct choice on this one. You have to choose another camera other than that one.
Hang on.
I hope Miss Tinto shows up. Be hard to have a meeting without her.
Unless I think she's.
That can film it?
Well, 102.
Yeah, that's one.
Was it working yesterday?
The meeting.
No, I wasn't here yesterday, so.
Yeah, when the Jack was here, it was working.
Adam Levinson.
Yeah, this was showing the podium when I came in.
Yeah, okay.
And through all of the resets,
We have to
punching,
start.
now we
excuse me,
got
We
it.
do have to start the meeting.
Mhm.
Okay, so.
Start, can you really do this?
Yeah.
Okay, I'm gonna get the other guy on the phone.
They just can't see that.
Give me a second.
Yeah, I mean, this
You want to start? Good afternoon, everybody. Some bit of technical difficulty, but we'll make it work. We're going to start the police officers retirement plan. I make what is here for 2025. Right. Miss Kendall?
I can't see who's in the room, Mayor.
Okay, well then we'll do a roll call on our own. Mr. Norwood?
Present.
Chief Shaw?
Present.
Assistant Chief Newcomb?
Present.
And I am present as well, Robbie Correa there. Has anybody had to review last meeting?
We approve it. Yes. Right.
Second.
We have a motion on, yeah, motion, second, thank you.
I'm sorry, I did not hear who the motions were made by.
They were, second was fine. Sure. On that, everything from that, sorry.
Thank you.
So this is Levinson. I'm just adding that the audio is a little garbled, so I'm going to turn off my speaker. And I think it may make sense for others to do that as well. Maybe it'll help.
Did I?
He said, yeah.
Audio is having issues. They're having issues with audio. He's having issues with audio.
Okay, yeah. If you're. He's having issues. Yes. I.
May I ask if the closed caption is on? We can't see it. That
It
would
is. It is.
Okay.
So don't feel left out. It's very hard to see on the.
Are you able to see it now, Kyle?
I'm not, but if it's on, that's fine. I can rewatch it.
Yeah, on.
Thank you.
Could you come on?
They're not here. He's there.
Excuse me. I'm not sure we should do that at this point.
He was just talking. Mr. Madden, are you able to hear us?
It's garbled, but you want me to go ahead?
Yes.
Yes, please.
All right, Kyle, if you want to put up my presentation for Capital City Trust over in Tallahassee. I'm Dwayne Madron, Portfolio Manager. And we'll go to the inside page called the policy review. I think Kyle's in the process of putting it up there, but nevertheless, the purpose of the policy review is just to inform you that all the asset classes are within the operating range prescribed by the policy. And also, we are underneath the 75% equity cap, currently at 70% equity. So we're in compliance with that part of the policy. We're holding a little bit extra cash right now in case there's a correction. And because cash is yielding 4.1%, it earns about as much as a bond. So for that reason, it doesn't hurt to hold cash. And especially in this environment, there are opportunities to buy stock when they sell off. So that's basically the position of the asset allocation in line with the written policy. And Kyle, I don't know if you have the performance or my report up, but the next page in talks about the S&P 500 valuation. Back in January, stocks were very expensive. They sold off, as you know, with the correction that started on February 19th and continued on through March and into April with Liberation Day tariffs. And so that part of that was needed because stocks were so expensive. And part of it was from fear of tariffs that were not expected to be the size that they were. So nevertheless, in early March, I made a purchase of about $300,000 into equities because they were cheap or cheaper. And there we go. Go ahead and page down. There's the policy. There's where that's it. S&P 500 valuation measures. So you can see on April 28th where stocks have come back down from their high, almost historical high in terms of valuation. So now instead of very expensive, they're somewhat expensive, enough to dip our toe in the water. Because we have an ambitious actuarial rate of return, we need to keep the stock level up high because that's where the return is going to come from, and that's equities. So like I was saying, I made an investment in early March, and the market recovered by early May. So we're back to breaking even, almost a little bit positive for the year after the president announced his 90-day reprieve and started negotiating tariffs aggressively. So the market liked that. Do you want to page down to the next page? We can talk about value and growth stocks. This is sort of a busy chart, but it shows in the green, which are growth stocks, where growth used to be. These are a lot of these stocks are technology stocks, where growth used to be fast and aggressive. And that was what was carrying the stock market, the growth stocks. But the earnings growth rate is leveling off and is not as robust as it was in the past 2 to 3 years. And so that's why the stock market is not moving as fast. It's those fun and gun tech stocks that are not growing quite as fast. And value stocks are starting to pick up the slack. Value meaning stocks like utilities, healthcare, consumer staples, and some consumer discretionary. So we're starting to see more breadth in the market where returns aren't coming from just 10 companies, they're coming from several hundred. So that's a good sign. If you want to page down, please, we'll look at the performance. So this is through the end of March. On the equity side, calendar year to date, we're at minus 2.75, and that's for the first quarter. So that reflects part of what I was saying, the correction from the Liberation Day tariffs and the fact that stocks are so expensive. So stocks themselves were down 3.53 in the fund, but in the high yield bonds return 1.57. Bonds doing their job as a diversifier. Cash return 1%. But if you look back over the past 5 years, the equity side of the pension fund returned 14.69 per year for each of the last 5 years ending March 31st. Quite good. So still that 5-year average is looking good. And so if you want to page down to the next page, we can look at April. You want to fast forward into the next quarter, page down one page, please. So April was also a month where stocks were still selling off. So calendar year to date, about the same story in April, minus 2.95. And for the total equity side of the pension fund, the stocks themselves were down 3.84. High yield bonds are up 1.93. So through April, not much change. May is the month that we'll be looking forward to reporting on at the next meeting. May was up, equities were up 6 to 7%, depending on how you define it. The rest of the report is just an asset allocation snapshot. And it talks, I don't know if you can page down, Kyle, but it talks about the asset allocation being 63% stocks, 28% bonds, and 7% cash. But that does not include the infrastructure and the private real estate. That would make stocks be closer to 70. So still an aggressive position. I'll let Burgess Chambers talk about the macro parts of the portfolio and the economy. But that concludes my comments. Thank you.
Virginia, can you page down to the asset allocation page for a moment, please?
Not moving, Kyle. I am
No,
attempting.
okay. All right, thank you anyway.
Thank you. Does anybody have any questions on Mr. Mosley? No. No questions? Do you have any questions? You will be motion to approve the report. Presenter. We have a motion by Mr. Norwood. Second by Assistant Chief Newcomb. All in favor? Aye. Any opposition? Thank you.
Thank you.
Thank you. These,
All right, I believe it's my turn. It's a little hard to hear, but Mitchell Brennan here from BCA to provide our report. My colleague, our newest intern, Chris Furton, is joining me to sit in on the call. So if you have a chance, we will start in the handout. So we have an updated market overview and plan update. Obviously, the market has been quite volatile. Perfect. This is what we'll go over first. So I want to give you a review of what happened in the first quarter and a little bit of an update of what has happened since. So if we go to the next page, for the first quarter, we did see a contraction in the economy, the first contraction really that we've seen since early 2022. And if you recall, early 2022 was when inflation was spiking. So in June of 22, inflation spiked to 9.1%. And so you can see in the chart, the bar, if you look right above 1Q 2022, that purple bar down, that's net exports. So that means during that first quarter of 2022, companies were significantly increasing their imports in excess of what the US was exporting to front run the increase in costs from inflation. Very similar to what we saw in the first quarter of 2025, but instead of inflation, it was a tariff-driven spike in imports. If we go to the next page, and despite all the uncertainty that we've seen around trade policy and tariffs being implemented and changed throughout the course of the first quarter and since the end of March, the labor market has remained resilient. So we got the April unemployment numbers in at 4.2%, which was in line with the previous month. And we also had an increase in jobs added, 177,000 for the month of April. We did see slight revisions down for March and February, but overall that 3-month average remained robust at 155,000. So the labor market continues to remain resilient. If you go to the next page. And so one of the areas that we're slightly concerned with from an economic standpoint is the contraction of the economy was 0.3%. We saw the huge surplus in imports for the first quarter of the year. Really that drop, that contraction in the economy was buffered by consumer spending, which continues to remain strong in the face of all the economic uncertainty. However, if you look at the bottom right-hand chart here, flows into early delinquencies. So these are percent of balances that are delinquent past 30 days for different asset categories like auto loans, credit cards, student loans, and mortgages. And you can see all of them, with the exception of student loans, have trended up significantly since really the middle of the pandemic, 2021. Now, student loans, while it's been stagnant, there was a moratorium during the Biden administration and during the pandemic that allowed student loan payments to be deferred. That has now gone off the table. And on May 5th, the Department of Education actually announced that they were giving authority to the federal student aid office to start resuming collection on the defaulted loans that are in their portfolio. And that impacts roughly 5 million individuals, and 4 million of those, so roughly 20% of outstanding federal student loans, are not just considered delinquent past 30 days, but they're considered seriously delinquent. So that's past 90 days. And so those collections began on May 5th. And we just got an update last week. That number that you see in the chart there, where it says 0.9% of all student loans delinquent past 30 days, that actually spiked up. It's now 8.2% of student loans. So significant increase again. And so as debt continues to burden the average consumer, adding another thing on top of your auto loans, credit cards, and mortgages is going to hamper further spending like we've seen in the past years. The one area we're not as concerned with is mortgages. While that has increased, it's a very different situation from what we saw during the great financial crisis and the housing crisis in 2007, 2008. And that's because most homes have built up enough equity that if an individual does default on their mortgage, they would certainly most likely be able to sell that home and not be underwater and be able to recover those mortgage losses. The next page, page 5. And so with all the uncertainty, the Consumer Sentiment Index, which is just a view of consumers on how they view the economy, whether optimistic or pessimistic, currently and in the future, dipped down to its lowest level since June of 2022. Again, I mentioned that was when inflation was over 9%. However, the good news is typically when we see a trough, so a bottoming out in consumer sentiment, we typically see shortly thereafter the market rally. And this was as of April. And so if you've turned on the CNBC or the business news at all since the end of April, you've seen that markets have certainly rallied, and we're actually now back into positive territory. So the reason consumer sentiment dipped, again, that Liberation Day, when President Trump came on the White House lawn and showed that big poster of all the tariffs across the globe that we were going to be imposing, that uncertainty shook consumers and led to that pessimistic view of the economy in the future. So the next page. And so after that announcement on April 2nd, we certainly saw markets sell off significantly. One thing that we like to look at when markets are extremely volatile and falling is it an orderly sell-off, or is there panic selling that would give us an opportunity to rebalance? A good indicator of that is spreads widening. So that's high yield spreads increasing and investment grade spreads getting lower. And that's an indication that people are selling their riskier investments and pouring into more conservative investments like treasuries and AAA rated corporate bonds. And so if you see that spread widen, you can see on the chart here, the last time we've seen it was during the pandemic in 2020. Prior to that was in 2008 during the great financial crisis. Those have all been indications when we kind of hit that spike, that's a good time to start rebalancing and taking advantage because the selling may be overdone. Now, we saw spreads widen slightly in April. However, it was not to the point that would indicate panic selling. And again, it was short-lived. The market has certainly rallied since the end of March. The next page. And as I indicated, we saw that significant volatility, very short-lived. So Liberation Day was April 2nd. We saw the following week, the market sold off by about 15%, which was roughly 20% below the prior all-time high in February. And so putting us right around bear market territory. A week later, so April 9th, was when the Trump administration announced that there was going to be a temporary reprieve of 90-day freeze on those tariffs while they negotiated trade deals. And you can see that day alone, the market's rebounded by 10%. Since that announcement, we've gotten a trade deal with the UK. We have a temporary trade deal with China that moved their tariffs down from 145%, which was certainly not sustainable, down to 35%. And in addition to that, we got April inflation numbers that came in lower than expected, which may indicate an opportunity towards the back half of this year for the Fed to be able to start cutting rates, which would certainly be a boost to our economy. The next page, and the last market update I have is, we've been on a 17-year stretch coming into this year of the U.S. handily outperforming international markets, and that flipped to start this year. And so this chart right here says through May, or the notes at the bottom say through May 16th, but I can give you updated numbers. Through the end of May, the MSCI EAFE, which is Developed Markets International, are actually up 17.3% year to date. Emerging markets, which include China, so China is excluded from developing market indexes, is up 8.9%. And the S&P 500, while we've rallied back into positive territory year to date, is up just 1.1% through the end of May. As of today, we've rallied even further. The S&P 500 is now up roughly 3 to 4% year to date, and within 2% of our all-time highs that we saw in the middle of February. One thing I'll mention is one of the reasons that we've underperformed the US versus international has been the Magnificent Seven. So those 7 large cap growth, tech, communications, consumer discretionary companies, Apple, Tesla, Google, Amazon, NVIDIA, those companies are down on average about 2.6%. And the biggest ones that are down so far year to date are Apple, which is down roughly 19%. A lot of that has to do with specific targeting from the new administration towards Apple in terms of their facilities abroad producing iPhones and iPads. So there's some contention with not only the facilities that they're utilizing manufacturing in China, but also their planned investment into India for further manufacturing facilities. Again, one of the goals of the new administration is to reshore a lot of manufacturing. And so they've specifically singled out Apple as a company that they want to reshore some of their manufacturing domestically. In addition to that, the next largest company within the Magnificent Seven that's had the largest sell-off is Tesla. No surprise. I think Elon Musk has been kind of polarized in a political realm, and so that's certainly hurt their stock. But on top of that, him being away from the company and not necessarily operating things has hurt the stock, as well as competition abroad, where 5 years ago Tesla was really the only name in EVs. Now the likes of Volkswagen and Chinese companies like BYD have really closed the gap in terms of the products and the vehicles that they're able to offer in the EV space. So with that, again, the Magnificent Seven has sold off significantly and have really hindered the performance of US markets. So with that, we can go into the report, the quarterly report. And we will start on page 5. And I'll provide you with an update for the quarter. And I will caveat it with most of these losses, not just for the quarter, but for the fiscal year to date, have been wiped out with the rally in May and to start June. So on page 5, you can see for the quarter, and remember this is a snapshot of March 31st, the plan was down 183,000 or 1.4%, in line with your strategic model. And your best performers for the quarter were the Vanguard FTSE Developed Markets International Fund. So again, international led the way for the quarter. Cohen & Steers Global Infrastructure Fund, which was up 5.2%. Keep in mind that portfolio is roughly 50% international and 50% US. And so that 50% international certainly helped their performance. And then Sawgrass, your fixed income manager, was up just over 3%. Fiscal year to date, so this is the halfway point of your fiscal year. The plan was down 207,000 or 1.5%, in line with your strategic model that was down 1.6. And then for the past year, the past 12 months, you've earned 738,000 or 5.9%, and ranked in the top 43rd percentile of other public pension funds across the country. The next bullet I'll highlight is a little further down. For the past 5 years, despite all the volatility we've seen, so that includes the pandemic 2020, 2021. It includes the market selling off in 22 when inflation spiked to over 9%, and the recent volatility of the trade uncertainties around tariff policy. Despite all that volatility, this plan has been able to earn $5.7 million and average an annualized return of 10.2% over that period. So very happy to see that performance despite the volatility. And again, just speaks to the diversification you have, allowing you to navigate different market cycles and outperform your benchmark in your assumed rate of return. With that, I will flip over to page 9. And this is a highlight as of March 31st, where your investments were allocated versus our targets. And so you can see here, domestic equity underweight, which was a great position to be in the first quarter as market sold off. Across the board, really in line, underweight fixed income, and then a large overweight to cash. And so I know Dwayne has mentioned he's been putting some of that to work as opportunities have been provided with the volatility. So I'd expect that 6% to be quite a bit lower at the June 30th report date. Next page, page 13, I'll just quickly run over some of your investments for the quarter. So as I mentioned, the big performers for the quarter were your international as well as your global infrastructure. Where we were somewhat disappointed was small cap. So you can see down 9.5%. Historically, small cap had been more immune to global trade issues and uncertainty. Unfortunately, because Canada and Mexico were kind of lumped in with the tariff policies, a lot of the small cap companies were still hit with the uncertainty in terms of global trade policy. And so we saw a small cap sell off by nearly 10%. It's rallied significantly since the end of March 31st. And that's an area we'd expect to continue to outperform at some point this year as valuations still remain undervalued for small cap, whereas Dwayne mentioned large cap, while it's become less overvalued, it's still somewhat overvalued compared to historical averages. The other investment I'll point out, American Funds Euro Pacific. You can see up 2.7% for the quarter, which is great when the market's down. However, relative to its benchmark, it underperformed by a little over 4%. And so we've mitigated some of that risk by having the index fund there, the Vanguard FTSE, which again had a fantastic quarter. And so at this time, we have no recommendation to make a change with American funds. They're roughly 1/3 of your international allocation. And if we go back, if you're able to flip back into that handout, I can just quickly highlight page 11 of the handout, which gives you a little bit further context on why we're just recommending staying patient with American funds. Yes, that one. So if you go down to page 11, historically, American Funds has been one of the best performing international managers. And it's really been a stretch since the middle of the pandemic where they've underperformed. You can see that first chart there is from the end of 2020 through March 2025. And essentially their portfolio has been flat, down 0.14% and ranked in the bottom 99th percentile. So one of the worst performers over that period. However, if we look at the 2 decades prior, you can see they've outperformed their benchmark from 2010 to 2020 by over 2.5%. And ranked in the top first percentile, so one of the best performing international managers. And then the decade 2000 to 2010, they're ranked in the top 7th percentile and outperformed their benchmark by nearly 1% on an annual basis. So again, it's been a very tough market environment with all the uncertainty and what a lot of investors call black swan events, things that typically don't see more than once in a lifetime since 2020. So we're certainly recommending just patience with American Funds Euro Pacific. We would expect them to iron out their portfolio over the next coming quarters and return to that longer term average of outperforming the benchmark. And so we're going to continue to monitor them quarterly. If performance continues to deteriorate, we'd certainly recommend either consolidating back into the index fund or recommending a replacement active manager for your portfolio. But again, at this time, just recommending patience. And other than that, that's really all I have for my presentation and update. And so I will conclude my report and just open it up for any questions or discussions that the board would like to have.
Thank you. Does anybody have any questions, Mr. President? No. I have a motion to approve the report is presented.
I'll make a motion to approve the report as presented.
Thank you. A motion by Chief Shaw, a second by. All in favor? Any opposition? Thank you.
Thank you.
Mr. Robinson? Mr. Robinson? Could you provide, please?
Can everybody hear me?
Yes.
So I am filling in for Anna today. She had a death in the family, so she is at a funeral today. But she sends her regards and looks forward to seeing everybody at the next meeting. There are two real quick items for the attorney's report, and the first is the ordinance, and the ordinance involves for all three plans, so that includes us and the city's other two plans, a lump sum option. And I'm wondering, because I don't want to mess with the technology, especially today, if anyone wants to share that. Can we share the screen of the ordinance and the version that Anna changed in the last couple of days to make it clear that this in the title is applying to all three of the city plans? Is that something we can share? And if not, I can read from the ordinance, and it's fairly simple.
We all like to look it up.
So I'm having a lot of trouble hearing, but let me
They
just
they
summarize.
are seeing it now. The ordinance
Excellent.
is up. Thank you.
Excellent. Good. So the ordinance is visible for everybody. And we did change in the last couple of days the title. So that way the title makes it clear this is the general plan, the police plan, and the fire plan. But the provisions are basically identical, that everyone will have a choice as long as they're not in the drop. But anyone who does regular retirement can receive, and I'm not sure what part of the ordinance you're looking at, so I'll just summarize it. But people will have a choice. It's entirely up to the member how much lump sum they want. So for example, if someone chooses a 5% lump sum, then they get a 95% benefit. If they choose a 10% lump sum, they get a 90% benefit. So that gives them a little bit of flexibility, and that makes sense for people who aren't in the drop, because if you go into the drop, you're going to have your drop lump sum. But if you don't do the drop, you're just getting your regular monthly benefit. So here the idea is that someone chooses, if they want, to receive less of a monthly benefit while they're alive, and instead they get that little bit of lump sum up front. So let me pause and explain that it's intended to be an actuarial equivalent benefit. And next time the actuary comes, you can talk with the actuary how this isn't a city cost, this is a member cost. So it's a trade-off, and it's entirely up to the member. And let me pause because I threw out a lot of information. Does that make sense so far?
Yes.
And let me just also mention that it's really four lump sum options. There's a 5% 95 option. There's a 10% 90 option. There's a 15 85 and a 80-20. So we're giving members flexibility. And next time anyone goes to conferences, you can compare notes. You can't talk to each other about board activity, but you can always talk to other cities. And this is becoming more common over time to give people flexibility. And we don't tell people this is important, and the administrator knows it. We don't recommend what somebody should do. It's entirely up to the member, and different people will have different objectives, different savings, different income, different liabilities. So it's important that we're not telling people what to choose. We want them to do the homework on their own. And does that all make sense?
Yes.
Fantastic. So the only other topic, which is going to go pretty quickly, and I'm not sure if we're able to share the memo, but this was a memo that our office sent to all of our clients, and this has to do with the Form 1 disclosure. And is it possible to share the screen?
It's here.
Fantastic. So this is a reminder for everybody that, and I'm reminding everyone that last year there was a new portal that was created by the Commission on Ethics. So before you had to do your Form 1 on a paper form or on a PDF, but now it's the portal. So people who've been on the board for at least a year are familiar with this because you did it last year. So the good news is it should not be difficult this year, because all you're doing, it's going to pre-populate with the data from last year. So you just have to update update it. And what our memo does is it gives you the contact information for the Commission on Ethics, and they want you to reach out with questions. And my office wants you to reach out to us if you have any questions. So the key is don't wait till the last minute, because if people wait, then it's going to be hard to get through to the commission and hard to get through to us. So we want everyone to get it out of the way, get it taken care of. And I like to say that our administrator will hunt you down and follow up with you to make sure that it doesn't fall between the cracks. And likewise, you'll get dirty emails, nasty reminders from the Commission on Ethics. So don't wait till the last minute. Give us a call and we'll help you figure out how to do it. And the good news again is that you're just updating the information from last year as appropriate. And I don't know offhand, do we have any new trustees, or we've got the same trustees as last year?
Well, we have one new. Chief
So
Shaw.
the one new trustee, we have to make sure that that new trustee is loaded into the portal. And I know that our administrator will work with the city clerk to make sure, because you can't do anything until you're in the portal. So let's make sure that our new trustee is loaded into the portal. And let me pause again to answer any questions.
And official. So. Just figure out.
I apologize. I could not hear any of that. I'm wondering if someone can repeat it closer to the microphone.
What? We have to solve complete the form.
Or
What? From start, 6 action back, come back to 5. Yes, we go. So we are supposed to.
So Kyle, I really can't hear much. So if someone can send us an email, then we'd be happy to answer the email. Or if anyone closer to the microphone, and I apologize, can repeat it, but I could not understand the question.
Miss.
No, I can't hear either, Adam. I apologize, and I'm.
Okay,
asking for-
Kyle, can you hear me?
Yes,
Yes.
Okay, every member on the board has already completed the Form 1 online.
oh, good. And Anna was asked a question, if you're ahead of a department, if you need to do a second one. She sent an email and said, no, one submission a year should suffice.
So I'm not disagreeing with Anna. She's right. But I'm just pointing out that some people like to do two. That way, there's just transparency that if you leave one board or leave one position, and it comes up in the capacity, for example, of police chiefs, right, who might be they may have to do it multiple times. So you don't have to, but some people think there's no harm in doing it. But I would defend that you're not required to create multiple paperwork, if you will. So I'm glad to hear everyone took care of it. That's music to my ears. So everybody gets A+. And then the last thing I'm going to mention, which I do this time of year, is I'm not sure if trustees have gone to conferences, but the FPPTA has its summer conference. And then I won't be at the summer conference, but I will be at the trustee school in October. So if anyone goes to the trustee school, then feel free to stop by and say hello. And here I get to sign off by saying that, again, Anna sends her regards, and we'll see you after the summer. And if anyone needs to reach us, we're happy to give our cell number. And we look forward to a positive resolution for the year as the fiscal year winds down in the summer. So that will conclude the attorney's report, unless there are any other questions.
Thank you. Questions? Do we have to approve the points presented?
And you know what? Let me end with my own question, which is different cities do ordinances differently. So some cities who want to spend money will ask us to attend every city commission meeting to answer questions on ordinances. Frankly, our preference is that if there are questions, let's try to answer them in advance with the elected officials, and we can play whatever role you want. So we're not planning on attending a city commission meeting unless requested. And it's the same question for the actuary, by the way. If the actuary is requested, the actuary can go to city commission meetings, but we will not plan on attending unless we're specifically asked. And again, we want to be constructive in an efficient and economical way. So that concludes the attorney's report.
That's they can present it to you as commissioner to the commission. Thank you. Do a motion?
I make a motion we approve reports presented.
Second.
A motion from Chief Shaw, second from Assistant Chair.
Aye.
Any- Mr. It's her. Right.
Thank you. I did want to thank Adam for leading into my conference list that I've included in the meeting packets. I always promote education for the trustees. You are currently not members of FPPTA, but if you're interested in joining, they're a great association that does a lot of good training, and we have the schedule up there. It's just for your information of the upcoming conferences. The next item I have is from Foster and Foster. It's a memo discussing FRS. They've updated their mortality tables, and the plan is going to be putting these in for the next evaluation. And the good news is they have the male participants living longer. So that's a good thing to hear instead of things have been going down. But we'll be putting in the new mortality table as part of the next valuation. And I wanted to let you know about that FRS has changed theirs, and we will be following suit for following the mortality table.
I
one-
would add,
Go
Kyle,
ahead.
if I could interrupt real quick.
Sure.
This is not something the board has to give an opinion on. It's required by statutory amendments from the last couple of years. So we have 2 years to incorporate an FRS change. So we have to do it this coming year. So it's all good. And there's a little bit of a cost that the actuary can talk about. But from a member standpoint, it's good news. And all plans across Florida are required to use the FRS mortality tables.
Thank you. When you're speaking about the actuary, there were two things. Anna had just recently sent over the completed ordinance for Foster to do a cost estimate. It probably will come out as a no impact statement that he'll provide, and that will be available at the next meeting. We also approved the valuation at the February meeting, but we did not set the assumed rate of return. We like it to match what the valuation says. And the statement that you need to approve, and you could see so moved on your motion if you agree with it, is we have a 7.5% rate of return for this plan. The motion should be based on the advice of the investment monitor and the actuary. The plan expects to receive a 7.5% rate of return for the next year, the next several years, and the long term thereafter.
So this is Levinson once again. So just to give a little bit more perspective, this is a discussion that Tallahassee, meaning the Division of Retirement, wants to see that you're having every year. And it is customary that boards, because we can't predict the future, and especially with markets which are volatile. So the Tallahassee wants to see that you're talking about this. And I defer, by the way, to the Burgess Chambers, who's in the house. But they could also point out that it is very customary that if you're using a number for your valuation, then that's what you were declaring for the short term, the intermediate, and the long term. And the issue is whether or not that number is reasonable. And the actuary wouldn't have put it in the valuation if they didn't think it was reasonable. And over time, they may want to see it decrease over time. But again, from the standpoint of the actuary who put it in the valuation, they think it's reasonable. And I think it's useful to have Burgess Chambers weighed in on whether or not they also agree that it's a reasonable number.
Yeah, thank you, Adam. I would also agree 7.5 is certainly sustainable, especially for the longer term.
Especially after those long returns for a year over 10%. I was glad to see that.
Mhm.
Down 7.5% rate of return for 1 year. Okay. Does everybody want a motion, please?
So,
Okay. Do we have a second?
a second.
Okay. The motion by Mr. Nolan, second by Mr. Stewart, for the 7.5% rate of return for 1 year. All in favor? Is
I have one other item. Mr. Norwood's term on the board as the fifth trustee expires in the end of June. And I am hoping he will be willing to serve on the board again. If he so wishes, the board will need to vote on the fifth trustee.
we have to control. Going to have the invite. We'll have to put the word on to get another volunteer. So, thank you. ASAP.
I'm sorry, I could not hear any of that.
Mr. No, just here. We want to appoint the seat, and we we make someone from that.
So you'll need to get another trustee that or nominate someone who's interested in being the fifth trustee, and we will do that for the next meeting.
Trustee.
Trustees, this is Levinson. I just wanted to add, and it's very difficult for me to hear the trustees talking, but let me just summarize real quick. What is a fifth trustee? So a fifth trustee is anyone who gets the votes of three other trustees. So a fifth trustee could be a police officer, could be a city resident, but does not have to be. And from my vantage point, I like to see that we're trying to get people who have some degree of, they have the time, they have the commitment, and in a perfect world, they might have some background they can bring to the table. So the time you find, bringing to the table fifth trustees is always well spent. So that gives you 3 months, if not longer, to try to recruit somebody that the city may know and that the department may know, who could bring value to the board. Thank you.
Thanks.
My last piece is the firefighters have requested a workshop following their meeting on August 26th. I wanted to know if the police officers would like the retirees invited to that workshop.
Yes.
Yes.
Okay, thank you. And that's all I had for the administrative report. And then we can go into the financials.
Yes.
The financials, first part are just to be received and filed for review. And then the warrant is in the meeting packet. It's dated the May 27th, the date that we had the meeting scheduled, but I would need a motion for the warrant to be approved.
Okay. Okay. You have a motion. Second. Second motion.
Thank you.
With that, so.
Question. The ordinance is, we address the recommended decision.
Yes. We do. So, do we want to be presented to the commission?
Yes.
Who wants to? Thanks. We have. Thanks. Okay.
Excited. I think we're finding two spots. Yeah.
Are you going to put it right back and no longer want to hang with us?
He's sitting on John's wall, at least another 2 years.
Virginia, are there any questions from,
They are not, they are moving forward to adjourn.
okay, thank you.
We've already,
And you see the next quarterly meeting is Tuesday, August 2025. I'm sorry, August 26, 2025. It says 1:30, but with the workshop, that may have to be adjusted.
Okay, thank you.
We got it coming.
we already scheduled. I'm just asking the question, why would I guess the city, I guess it might be a financial workshop, budgeting workshop, or whatever, why would they schedule a workshop when there's a meeting already scheduled?
That's a good question.
I think it's to discuss fixing the,
Setting.
setting basically a permit. Multiplier.
Yeah.
Doesn't we have two? And then, and
But we don't. What we're missing is Mr. Logan is saying that,
if we would schedule back in January, last, November last year, this meeting. Why is it we're scheduling meetings on a day that the meeting's already scheduled? I don't care whether it's city commission, whoever. Why are we not voting on the calendar and saying these are the meetings we got scheduled?
we can't. Workshop is the 27th, did you say 26th or the 27th? I think 26th.
No, they said 26.
Okay, so we're set there.
Okay.
Yeah, and this compromise is separate, it should be submitted to the whole court agent.
I see you be looking at the calendar.
Yeah, that would be great.
Or dates.
Yeah.
I mean, I understand that the commission was saying, they can go right close to any time, but, my point is, if that makes sense for us to set meeting dates, and if they're gonna change it, and then we've got to adjust, and I may be on vacation or whatever. But, you know.
Yeah. Anything else? We did touch Mr. Chairman.
Yes.
Thanks, everyone.
Thank you.
Thank you, everybody.
Virginia, can you give me a call when you have a moment?
I will.
Thank you.
That's the 26th of August.